All participants will be on listen-only mode. If you have any questions, you can raise your hand and you'll be prompted to unmute yourself and ask your question, or you can put your question in the chat box and we will read them out to the management. So with that, over to you, Ms. Anjum.
Thank you, Yusra. Assalamu alaikum everyone, and welcome to our corporate briefing session for 2024, where we'll also discuss the half-year results. So we're looking at the first slide of the presentation, where we have some basic information about the bank. So very quickly, we are a AAA rated bank. We operate out of 240 cities across Pakistan, and we have presence in 4 other countries abroad. And we have a very strong capital adequacy ratio of 17.96 at December end, and which is hovering around the same range at June as well. Can we have the next slide? So here you're looking at our market positioning. So we continue to grow our advances book. Our market share for advances has increased to 7.5%. For deposits, our market share based on averages is 6.1, and for current deposits, it's 6.5. And I would like to point out here that last year there was a strategic shift in the bank where we started focusing more on current account deposits and growing sticky granular deposits. And as a result, we changed our metric as well to monitoring market share on averages rather than end of period. So just to give perspective to that number being reflected here. For SME lending, our market share is 8.2%. In the consumer lending business, we are amongst the top 2 players. For auto loan and home loans, we are actually the largest player in the market. We have the largest share of wallet here. For credit card and personal loans, we are the second highest player in the market. Now, looking at remittances, because of the dynamics of the remittance business, we were strategically, not pursuing this aggressively. But despite that, we have, maintained the same volumes, same throughput, which we churned last year. And our market share for remittances stands at 13.9%. Regarding trade, our trade volumes grew by 17% year on year, which resulted in an increase in market share to 9.5%. We could go to the next slide. Now here we are looking at our network information. So we have 112,000 touch points, which include our branch network and our digital solutions. So our branch network has increased to 1184. And we opened 133 new branches in the last 12 months. And around about 38% of our branch network is Islamic. We are serving 9.3 million customers. We could go to the next slide. Now here we are showing the trend of the last few quarters of our key matrices. Now, just to recap, towards the mid of last year, there was an imposition of ADR taxation on banks. What it led to was some distortion in the market dynamics. The market started pursuing advances very aggressively while there was curtailment on the deposit side. And you see that reflection in our numbers for the Q2, Q3, and Q4 numbers for deposits and advances. Now, at that time, we also did a strategic shift. We decided that for deposits, our strategy going forward would be focused more on growing averages, growing current account, growing sticky deposits. And we see that strategy play out nicely in these numbers, because we see that we closed December at 2.1 trillion. Here, the CAR mix was 38%. And over the half year, we've grown total deposits by around 7%. Our current account grew by around 16%. And as a result, our CAR mix has improved to 42%. Advances, as I said, ADR-linked phenomena led to our December number for advances being significantly higher. It was 1.2 trillion. And some of those ADR-backed positions were short-term, and they liquidated in the first quarter of this year. And what we see now is from first quarter to second quarter is we see that, this year actually there's normalcy in the market. The market dynamics have normalized in this domain, and we see the advances portfolio grow back to 1 trillion. The net asset, or I would say net equity number, you see that it's steadily going up. Regarding investments, now investments are usually a factor of our surplus liquidity. And of course, a significant part of it is usually backed by treasury positions, which treasury borrowing positions, which they take on based on their interest rate view to place in investments. And so those borrowing positions, the treasury was carrying at December end, and it continued till quarter one, and then it started tapering in the second quarter. So we see that the investment book is slightly down on the back of running off of the treasury borrowing positions because of the change in the interest rate view of our treasury. Okay, our next section is about 2024 result recap. This slide, I've also already talked about the key matrices for balance sheet. We could jump on to the P&L. Yusra, the next slide, please. Yeah. Okay, so our profit after tax for 2024 was 38 billion, and there were quite a few factors, going into this number, and there were quite a few challenges. So the first and foremost challenge was the fact that, of course, the banking industry was, there was an additional tax of 5% imposed on the banking industry. That took away incremental 4.2 billion from the bottom line last year. On the revenue front, the challenge was, again, the rate cut, the turn of the cycle had started. There was rate cut, there was spread compression, and what I talked about, the ADR linked, distortions in the market led to some positions which gave a drag on the net interest income. But despite all that, we managed to post current account growth. There were treasury positions which the treasury had taken on, which helped us realize capital gains and helped us gave some support to the net interest income, and hence our total income grew by 11%. On the admin expenses side, this was up because of our usual, we were actually coming off a very high interest rate, inflationary cycle. Then there was expansion, and hiring. All of that has gone into that line. Provisions were lower on the back of very good recovery pipeline last year. So all in all, these are the key challenges which we were able to ward off and still post a growth on our bottom line last year. Okay, so this slide is about the ratios and some of the things which I've been talking about. You'll see, the impact of that here. You'll see that the spread compression, when you refer to the NIM or spread line, or you'll see the normalizing returns on ROA, ROE because of the turn of the interest rate cycle. You see that in this chart, and I'll talk about this more in a subsequent slide. We could now jump over, yeah, thank you. The half year results for June. Okay, so again, I've talked about the balance sheet numbers, so we could talk about straight going to the P&Ls directly. The next slide, please, Yusra. Okay, so, yeah, okay. So our half year profit after tax is 15 billion. It's less than last year. And the first factor which I'll talk about is, again, incremental taxation, because the tax which was, imposed on the banking industry was towards the end of the last year. And there's some, add on to that in this period as well. Now, when we look at our profitability and especially the challenges on our total income, again, first and foremost, again, it's the declining interest rates resulting in spread compression, which actually we've managed to ward off quite well because of the treasury, positions in long-term bonds, which gave us support in the net interest income and helped us realize capital gains as well. you know, of course, our strategy to grow current accounts has helped in the COD significantly, and that has helped give us, contributed to this growth in net in total income. Looking at admin expenses are up 41%. And the key factor going into this number is the home remittance related marketing expense. And if I were to strip that number out, then the admin expenses of our bank have grown by around 25% year on year. And that encompass our, again, usual branch expansion. We are operating on 133 new additional branches opened last year. So that has added to the full year cost this year. And the higher inflation, hiring, and all the other initiatives have gone into that 25% number. Our provisions are overall lower than the same period last year because of the healthy, again, recovery pipeline, even though we still continue to take some subjective provisions. And you will be able to see that in our Q2 number, which is slightly up versus the Q1 number. So that's the subjective provisions which we have taken on. So all in all, this results in a PAT of 15 billion with 26% compression since the same period last year. Next slide. I'll pinpoint a few numbers here. If we look at the line for spreads, we see that Q1, Q2, we've managed to maintain our spread. Again, as I said, it's because of the treasury-backed positions, which helped us maintain this, managing our ALM book, in a fashion which helped us sustain the compression better than anticipated. Our return on asset stands at 1%. Our ROE stands at 22%. Our coverage ratio, our infection ratio is 4.1. So there's hardly any significant increase in NPL. Again, and whatever increase there was more of a factor of subjective classification, and coverage is 107%. I think we can now move on to our next slide, the final slide before we open for Q&A. So here we're showing our digital performance, and we see growth in this front. So our digital throughput in the 6 months of 2025 was 9.1 trillion, as against 9.5 trillion, which we processed in the 12 months last year. So significant increase in throughput versus last year, 80% year on year. So, and all of this results in, adds to our fee commission, gives us float, and of course gives us cross-sell opportunities. So it's very critical, for the bank. Our Alpha app customers stand at 1.1, and these are the 30-day active customers which we track, and they stand at 1.1 million. And another thing which I would want to highlight on this slide is our digital migration ratio, which we monitor quite closely. And this is up at 89%, and at December, we were at 84. So this shows that our digital strategy is playing out nicely, and and we're getting good traction on all our product lines in this front. I think with that we can open the floor for question. I can't hear you, Yusra. If you are.
Okay. Thank you, Anjum, for that presentation. Once again, participants, if you have a question, you can raise your hand and you'll be prompted to unmute yourself and ask your questions directly, or you can write them in the chat box and we'll have them answered by the Al Falah team. Please bear in mind that we would like to keep the questions limited to the bank's performance and financial
Do you hear
outlook.
me? Assalamu alaikum. Do you hear me? This is Mohammad Hanif.
Ji Hanif sir, we can hear you.
थैंक यू वेरी मच।
अस्सलाम
मेरा
वालेकुम।
सवाल सिर्फ ये है कि आपकी जो डिक्रीज इन्वेस्टमेंट
Sorry, excuse me, but we're going to first take our question from Sayed
So
Fawad.
Yusra, I think he was about to, state his question. Maybe
Sure, let me
let's
just.
let's do him first and then we can jump on to the chat
Okay,
window.
Mr.
हेलो
Ji, Mohammed
Ji,
Hasan, your line is open.
मेरा सवाल सिर्फ ये है कि आपकी जो इन्वेस्टमेंट है वो डिक्रीज हुई एज कम्पेयर टू अदर बैंक्स, क्या वजह है इसमें?
सो हनीफ साहब, एक्चुअली जिस तरह मैं बता रही थी, ये जो हम इन्वेस्टमेंट्स जो हम करते हैं, इसके पीछे जो है ना, काफ़ी सारी जो होती हैं वो ट्रेजरी बोरिंग पोजीशंस होती हैं कि ट्रेजरी बोरो करती है और फिर उसको इन्वेस्टमेंट में प्लेस करती है। एंड ये जो एक्टिविटी है इज अ फैक्टर ऑफ where they see the interest rates going. So depending on the changing view and the fact कि आगे वो interest rates को क्या देख रहे हैं, and then there are opportunities to realize some capital gains and restructure the balance sheet, तो ये positions ऊपर नीचे होती रहती हैं। तो इन्होंने जून पे हमने वो बोरिंग पोजीशंस थोड़ी लिक्विडेट की हैं, तभी
वैसे
आपकी
मेरी
इन्वेस्टमेंट कम हो
कॉमेंट,
रही है।
हाँ वही वही सवाल था मेरा, लेकिन मैं मुतमईन हूँ इससे। लेकिन आपकी जो प्रेजेंटेशन है वो बहुत अच्छी हुई है, मैनी कॉन्ग्रेचुलेशन टू यू, और उम्मीद है कि इसी तरह आप अच्छा करेंगे। अदरवाइज तकरीबन सारी चीजें आपने इसमें दी है, जो एक सवाल था वो मैंने कर लिया। थैंक यू वेरी मच।
Thank you so much.
थैंक यू। थैंक
We'll move on to the next question, which is from the line of Mr. Syed Fawad Basir. Your line is open.
Hi. Again, congratulations on a great result and the payout, which has increased since last year. My question is very similar to what Mr. Hanif Saab has asked, and what we've seen in the banks that have posted the results so far is that there's a buildup in borrowings further, and that strategy is slightly contrary to what we've seen in Bank al Falah. So, what's the view that is different at this point in time?
Parvez, do you want to take this question?
Yes, sure. So, as Anjum very, simply mentioned that it all depends on, our view in terms of where we are heading on the interest rate side. So, we at Bank Alphala believes that we are very close to the interest rate bottom. And that's why we thought that, markets have rallied enough. So we have just liquidated some of our positions. If we get an opportunity again, so obviously, we will build our positions again. But as of now, because we believe that we are very close to the interest rate bottom, so we have liquidated some of our profitable positions.
I'll just take you up on what you've said right now, and that leads me to ask you just one more question, Yusra, then I'm done. What's your view on the interest rates going forward then?
So as I very clearly said that we are very close to the interest rate bottom. So that's the view. So we at Bank Al Falah, our view is that interest rates will perhaps not go down any further, although market believes that there is still a room of 50 to 100 basis points for a rate cut.
All right. Thank you so much, sir.
So the next question is from the line of Mr. Raza Inam. Raza, your
Okay.
line.
Assalamu alaikum. Actually, I have a couple of questions. My first question is that the commission and remittance significantly down compared to last year. And secondly, the marketing and advertising expenses significantly up from last year. So with the government restarting the commission remittance scheme, so when can you provide some guidance on this?
Okay, so both the lines are linked. So what happened was that last year there was a change in the commission structure, of by central bank, the rebate structure, and this rebate structure favored the smaller players in this smaller banks more than the large players. And Alfala in the remittance domain was the second highest player in the market. and hence we were impacted more because of this change in the rebate structure. And we were expecting this to balance out eventually. And, in early July, a State Bank has at least addressed the rebate part of this equation. And the rebate is now flat and uniform for all players. So we do see that there is a lot of normalcy returning on that front, though there is still a little bit of competition. And of course, people have heard the news, and there are discussions happening at the senior level in government, because these remittances had increased significantly from 31 to 38 billion dollars, coming into the government kitty, which you know uh, which now is a challenge based on the new budget allocation. There's a discussion going on as to how to ensure that these flows remain, in the formal channels and continue to grow. And we expect that, and there, again, there are discussions going on. We expect that something positive will emerge on that front. But till that time, what I can share with you is the fact that things have already started to normalize, and the earlier run rate for our, or I should say the drag is now lower, significantly lower than what it was earlier.
Okay. My second question related to investment book. Can you tell what current portion of your investment is in fixed PIB and what is the duration?
Okay, so in our domestic investment book, we have roughly 35 or 36% invested in fixed rate PIBs, and we also have some fixed rate sukuks. And the yield is, I think PIB is somewhere around 13.7%, and the sukuks are, I think, well above 14%.
Okay. And what? Thank you.
Thank you, Raza. Our next question is from the line of Syed Muhammad Anif. Your line is open. Please identify from which house you are from. Mr.
क्योंकि
Hanif.
मैंने अपना सवाल कर लिया.
Okay.
I
Your
raised
hand,
my question.
your hand is raised. Okay. Next question is from Mr. Anas Motiwala.
Assalamualaikum. I represent a family office. I have a couple of questions. One is कि ये जो I think around we spent around 8-9 billion over the last 6 months. So ये expenses exactly जा किस तरह से रहे हैं? Is this like a social media campaign जिस पे हम लोग खर्चा कर रहे हैं? Is this ये जो agents होते हैं जो पहले वो workers की remittances collect करके हवाला हुंडी में जाते थे, उनके साथ ये rebate share हो रहा है, and you're onboarding them and you were giving them the rebate वही terms पे to continue your market share. इस पे जरा से बताएंगे कि exactly ये 9 अरब खर्च किस तरह से हो रहे हैं?
Okay, so we have these remittances, we have remittance partners, in different countries, and what we call tie-ups. So these funds are, a pass through to those remittance partners, who eventually keep some commission for themselves and give some to the actual remitter. And that's how you create this diversion from the informal structure to the formal structure. That's how, and these are the funds which are sort of used to, motivate them to use the formal structure.
Fair enough. And तो फिर ये जो expense की जो run rate है, should we expect this to continue? And what's going to happen is that the income side is also going to start accelerating faster than what we're spending on it. But ये जो expenses की run rate है, this is going to continue going forward?
See, so as I explained, the rebate which we get from central bank, now the rebate structure has been fixed. So at least now there's even playing field between the banks and all the players in this domain, that everybody gets the same commission rate for a dollar mobilized. So that will help us, reduce this expenditure, of course. But again, as I said, there are still some directions awaited, and ultimately banks use these funds to sort of support their import business. So, if there's any distortion in the market which leads to anybody offering a higher price, then there could be, a price distortion. But that's something which could or may not materialize going forward. So there's always, that's the dynamic of that business. But so far, what we've seen is that the things have eased off. The pressure which was there has eased off very significantly. There is a little bit of spend still in the pipeline, but not as significant as it was earlier.
Perfect. And in terms of, because I know you guys have been guiding more towards now current account growth instead of the total deposit growth that we should keep tracking. So is there any sort of an indication in terms of like how many branches we're looking to add going forward, and what kind of current account or overall deposit growth that the bank is looking forward?
So just in the 6 months of this year, we've, I think, opened around 33 branches. But going forward, at least for this year, we are going to not be very aggressively going any more branches. A few more branches might be opened, but we are also optimizing the network. There are certain branches which have not, which where we do not have the same visibility, as there used to be, and that has impacted the business of that branch. So we are also looking at branch closures and relocations. So possibly for the rest of the 6 months, you will not see the net number grow too much, and again, it's a factor of the business, overall dynamics of the country, but this is when we plan for next year, depending on what we foresee the interest rates to be and the other dynamics to be, inflation and other things, then we will plan our branch expansion policy for next year. But for now, rest of 2025, more or less, this number will remain on the net basis.
Fair enough. Just one more follow-up on that. We know a certain banking competitor has been able to increase their deposits very aggressively. So I'm just trying to understand what because the overall deposit growth in the market is not that big, but it's obvious to who I'm referring to, but they've been able to grow their deposits very aggressively. So if you can just paint a picture of the industry, where are they taking the deposits from? Are they going to areas which weren't explored? Are they taking someone else's market share, or are they creating new deposits? How is someone able to grow so aggressively? They've basically added Alphalah's deposits over the last year or so. So I'm just trying to understand how something like that is possible.
Okay, so I'm able to just answer questions relating to my book, and what I could say is that there is, of course, growth in the system. There is true growth, So and people and other banks may have taken the share of somebody else's. We don't have all the results out as yet, but there is overall growth in the total deposit in the system. And how it has exchanged hands, we will see that going forward. But as far as we are concerned, we are clear on a couple of things that, we feel that the stable growth in averages pays off in the long run. While we may get a little, it adds to the excitement when we see, a very significant growth at a period end. But what its contribution on the bottom line is not as significant usually. And many a times when banks are competing with each other for market share, they result in outpricing, and they result in distortion in market pricing and negative carry, which is not something, which we want to, indulge in. So our focus right now is on current deposits, growing granular deposits, growing profitable deposits, not so much focused by a cutoff number, but growing averages. So if the market dynamics change, and of course, any deposit where we have a positive spread is what we are looking at, but we are not, sort of this motivated by, sort of the objective is not to have a certain period at post a certain period at number. So that's our thought process, which I can articulate for you.
Fair enough. I understand that we're not chasing growth for growth's sake. I have one more question on the leverage side of the bank. So the goal for the bank is not to re-lever, because I know the trade was essentially to borrow from the repo market and park it in floaters, and I think you were getting 100 basis point spread. But the bank is not seeing value in that anymore. The bank will slowly, as the interest rates come down, continue to de-lever their book. Is that how the treasury is looking to play this next leg of the cycle?
Okay, so let me take this question. I think I have partly answered this question earlier as well, that the strategy is when you are in a downward sloping, falling interest rate environment, then obviously you tend to borrow as much as possible, because as and when interest rate are cut, obviously the carry gets bigger. But when you are either close to the interest rate bottom, or if you believe that interest rate cycle will turn, then obviously you tend to liquidate your position. And this is exactly what we have done so far. So we believe that we are very close to the interest rate bottom, and that's why we have liquidated some of our borrowing positions, where we believe that although we were getting a positive carry, but I believe the gains, or the capital gains, were far greater than the positive carry we were getting. So that's why we liquidated the position.
Fair enough. Thank you. I just have one more question. On your
Um,
slides only, I was seeing that the digital lending has gone up. I think it was a number like 30 billion or something like that. So I would imagine this is probably non-collateralized lending or something. Is there something innovative going on the digital side of things, or it's too early for anything meaningful to come as of yet?
No, there is, of course, innovation going on, and that's why we are showcasing it in that slide, because a lot of these numbers are, instant loans, which we are able to, book through our Alpha app. They're able to, submit their applications to Alpha app, instant loans, and, other stuff. And right now, this is, of course, sort of the target population is a pre-screened population, which we target. And as our models develop and become, more sophisticated, this will be opened, to a wider target our audience.
Anas, I hope that answers your question. So, Ms. Anjum, there are quite a few questions on the chat box. I'd like to take a couple of those. Waleed Rathor is asking, I think the first half of his question has been answered. He asking the composition of floater and fixed PIBs and T-bills in the total investor book. And he's asking for the yields on the floating PIBs, fixed and T-bills, and if there will be any repricing in the investment portfolio in the second half of the year. So maybe we can answer the second part, which is the repricing in the investment portfolio in the second half.
So the answer is yes, we have a fairly good amount of repricing left, which will be done from July until December, and that will certainly have an impact on our floating rate bonds return.
All right, and he's asking about the average duration of the fixed portfolio. If you could comment on that.
If I recall, I think it is around 2.3, 2.4 years.
All right, and I think the second question is on borrowings. He's asking if the bank will be maintaining the similar level or will it be increasing it again? And he's also coupled this with the deposit growth. He said that you mentioned the last target was 10 to 15%. So does this remain?
So the borrowing part I can take, deposit Anjum can respond. So on the borrowing, as I just mentioned earlier, that it all depends upon market opportunity. So at the moment, at the end of last quarter, we believe that it is the time to liquidate the position. So we actually decreased our borrowings. But if we believe going forward, if there is a market opportunity to run a a good carry position, then certainly we can add some borrowings. So it's open, but at the moment we have reduced our portfolio, and so have we reduced our borrowings.
Ms. Anjum, I think he's asking for the deposit growth target.
So our target for this is about the total deposit growth. Again, since I'm not very aggressively, pushing for end of period growth, but we're expecting that still it's going to be around 15% or north of 15% for total deposits. But for current account, it should be higher than that.
Got it. Next question is from Mr. Saklan Paracha. He is asking for a guidance on dividends. I think he's saying that the bank has a healthy CAR ratio, so is there a need to retain?
Okay, so our dividend policy is a factor of our expansion plans, what we want to do. And those plans include our growth and advances. We want to grow the balance sheet. It's not just initiatives, which we do like opening branches, but also like balance sheet growth. For that, you need additional CAR. So of course, the first thing which we look at when we decide a dividend policy and decide a capacity is our expansion plans, what we want to grow and how. So Alphala usually has always, a few years were exception when the interest rates were extremely, extremely high because of a factor of demand and credit risk, but Alphala always had a very high ADR ratio. And we intend to continue to do business that way, and for that we need capital. And of course, other than that, we have other initiatives as well which require capital. So those are the factors which we consider.
All right. The next question is from Mohammed Kumel from AKD Securities, asking the bank's view on the policy rate for the remaining of CY25.
I think I have already mentioned that. So our view is that
Yeah.
interest rates will not be cut anymore, contrary to the market view of 50 to 100 basis point cut going forward.
Got it. We have a question from Mr. Zain Zafar. He's asking, when do you expect the effect of the one-time remittance related admin expenses to subside? I think, Anjum, you've touched upon this in detail. And then when will the cost to income come back to normalized levels? Do you have a target for this?
So the gentleman is referring to normalized level of 50%. That was never the normalized limit, that was a factor of a very, very high interest rates environment, which was a market anomaly at a certain point in time. So again, you have to look at cost to income in the context of the bank you're looking at. So for Bank Alphala, we are, significantly large retail commercial bank. We are a bank where our strategy revolves around investing significantly in technology. We are a bank which has a very relatively new infrastructure, like most of the, uh, branches have been opened, a relatively new network of branch. So all of that adds to the cost. And again, our aspirations on the digital front, and other products which is part of our strategy all lead to cost. And this is not actually cost. We call that investment because what we're trying to do is we are future proofing the business model of this bank, because without investment in these without expanding, without investment in these technologies, we may well become irrelevant going forward. So that to stay competitive, this is the necessary cost which we have to incur. And for us, when it's a factor, it's very much driven by where the interest rates are, in the market. So when the interest rates are going down and are being cut, the normal range for us would be around about 56 to 58%. That's what we are, but that's what our strategy is. And this is, this is what is built into our numbers, and that's where, we are still able to give a good return to all our stakeholders and also invest back in the company.
Thank you for that, Anjum. We have a raised hand. Mr. Shah Saud, your line is open. Please unmute yourself.
Hello, Swagul. Thank you for allowing me. I have a two or three questions. One thing is that when mostly I'm hearing कि हम जो है वो rates जो है वो cut down होते हैं, उसमें दो तीन factors होते हैं जो we have seen के banks को supports करते हैं. One is fee commission, वो भी हमारी declining side पे है, और दूसरा एक ट्रेजरी की सपोर्ट होती है. अदरवाइज आई हैव नॉट सीन एनी ग्रोथ इन डिविडेंड इनकम एज वेल. तो कैन यू मैम, कैन यू प्रिफर टू आंसर इट कि व्हाई वी डू नॉट सी एनी इंक्रीज इन बोथ ऑफ द आइटम्स? और उसके अलावा अगर हम सब्सिडी साइड पे जाएं तो कंसोलिडेटेड में भी हमारा प्रॉफिट जो है वो डिक्लाइनिंग साइड पे. तो क्या अल्फला इन्वेस्टमेंट्स या अदर सब्सिडी इज इन लॉस और समथिंग एल्स? थैंक यू.
अच्छा जी, दो तीन चीजें आपने पूछी हैं. देखें, ट्रेजरी पोजीशन तो आपको नजर आएगी फाइनेंशियल्स में, बिकॉज व्हेन यू लुक एट द P&L यू सी द कैपिटल गेन्स वी रियलाइज्ड. यू सी दैट द बॉन्ड बुक व्हिच आई स्पोक अबाउट गिव सपोर्ट टू आवर NII. जो लॉन्ग टर्म बॉन्ड्स व्हिच परवेज स्पोक अबाउट गिव सपोर्ट टू आवर नेट इंटरेस्ट इनकम. Otherwise, without, and you looked at, I showed you the ratio slide where the Q1 ratio versus the Q2 ratio was spread for both the quarters was flat. How is that happening in a declining interest rate scenario? That's happening because of our treasury positions which we've taken on and how we've managed the balance sheet, and you see capital gains. So you have a look at those lines and you realize what's happening at that front. Fee commission, yes, is impacted. Fee commission, the primary thing impacting fee commission is remittance income, which we've already have explained the whole thing. There are a couple of other lines which are impacted. Again, it's a factor of market dynamics there as well, where again, market competition is distorting the pricing for that product. But eventually, what happens in such a scenario is that a balance actually emerges eventually. There could be a little bit of compression one day, but all the players will sooner or later come to the market will equalize. And in the other lines, we are showing growth. So we will continue to grow on those lines. You see that our trade income is growing. Our trade volumes grew significantly, which led to trade income growth, guarantees income growing, branch banking income growing. So there are many factors, which would help us make up for that till the time there's stability on the other fronts. Regarding our consolidated results, so the Bank Alphala is the major component of consolidated results. Our associates and subsidiaries are not as significant when you compare them to Bank Alphala. They're relatively small. So what the dynamics of Bank Alphala's results are always exhibited in our consolidated results. So it's not as if they're making a loss, but it's just a factor of, there's a direct correlation there by just the fact that we are a very significant part of that.
I hope that answers your question. So we have a couple of more from Mr. Syed Murtaza Hassan. I think most of his questions have been answered. He's asking Bank Alphala's ADR target for CY25 and current account target for CY25.
I don't have a very precise ADR target, except for the fact that, we will continue to focus on lending. That will remain a prime, focus area for us. And you can see that already in our numbers where the June figure for advances is significantly up, and for deposits, again, the fact is that we are not chasing end of period. So ADR is a factor of both of these factors. For current account, I've already mentioned that it's going to be higher. We have already posted like 16% growth in current account in this half year. And if you look at our averages, our current account grew by 19%. So I am expecting that my current account growth is going to continue in this robust manner going forward.
Okay, thank you for that. We have a question from Mr. Talha Ganatra. He's asking, what initiatives is the company taking to reduce operational costs with AI data analytics?
Okay, so they go hand in glove because bank is the technology and especially the digital side has started using AI, especially in their coding. So that is something which is already being used. And that, of course, brings efficiency, in any products which they're developing and any offering which they have. Otherwise, right now, AI is being used in some sort of chatbots and other solutions which we have made to facilitate and bring efficiency within the system. And what it does is, of course, it has replaced a manual process, or it has made some process efficient. So there is efficiency being brought in. So those are the two uh, key areas where we are using AI, but there are many other things happening on that front.
Thank you. We have a question from Mr. Ahmed Mehdi. He's asking, what's the bank's view on acquisitions in the digital and tech space, specifically regarding the recent acquisition of Jingle Pay and how that's panning out and future developments locally?
So just like any other equity investment, we look at a proposition and we look at the strength of that proposition, the returns it might offer, what need is it addressing, and of course this which sponsors are they backing their success so far in raising capital. Many factors go into all this. So Jingle Pay was one such proposition where bank took on an equity stake, and we feel that there are sort of an aggregator in the remittance space which addresses a need in the market. And in other areas as well, we will continue to look at options, and wherever we see that there could be a good prospect of return, we may consider that. There's no hard target. It really depends on what comes along and how strong that proposition is.
Great, got it. And we have a question from Mr. Brandon D'Souza. He's asking, what is the year-on-year growth in average current deposits for June 25? I think you can find that in the financial accounts as well. So we have another question from Mr. Abdul Mukeet. He's trying to understand the remittance.
It's
Yeah.
19%. Average may not be available, but it's 19%.
19%, thank you. So we have a question from Mr. Abdul Mukeet. He's asking to understand the rebate structure for remittances. He's asking is 20 Saudi Riyal per $200 transaction an income for the bank, or the bank has to share this with other partners?
So this is a total pass-through. It really depends on the partner. What was happening in the market earlier was that for example, if we say that we are getting 20 from central bank. So what the market dynamics was doing was that the partners were being paid, let's say 25, let's say 30, depending on what was the need for FX for a different bank. So that's how it was. And this commission is expected to be there's a bank is supposed to retain a share, and most of it goes to the partner. But the present market dynamics are that most of this goes to the partner, and through the partner retains something, and partner then shares this with the remitter.
Thank you for that detailed breakup. So, another question from Mr. Anas Motiwala. He's asking if you could clarify the cost to income target for next year, if it could go to 55% after normalized remittance expenses.
So even when we look at my results now, and if I were to exclude remittances, cost to income comes down significantly down to 53%. But I've also explained to you that cost to income for a bank of our dynamics is usually higher. So while we see that the remittance side is going to ease off, but the cost to income, because of our other initiatives, would not come to 50% or anything. So it's going to still remain a little bit, 56, 50, 55, 56 to 58 range.
Thank you. And we have a question from Mr. Ali Akhtar. He's asking, with interest rates bottoming out, how do you see banking sector profitability next year, and what measures the management plans to increase profitability going forward?
That's a factor of volumes, and interest rate decline started last year, and we've managed to, maintain our profitability just on the sheer, the two facts. The key one was, of course, generating volumes, posting current account growth, and the other was treasury strategy. And these are the two, tools which we have going forward as well. So, it's going to be a factor of posting growth in average deposits, in current accounts, in advances. We have an investment book which will give us support going forward as well. So those are the tools which we'll work with.
Great, thank you. We don't have any further questions on the chat box. Just one question from my end would be on the provisioning charge that was booked in 2Q25. If you could shed some light on that and the guidance for asset quality going forward.
So 2Q, as I explained, is somewhat of a subjective charge which we have taken. We saw some concern in one sector, and we took a subjective charge for that. But you'll see that my NPL number has not significantly increased. My infection is 4.1, and going forward, we see no risk to asset quality at all. The credit environment has actually improved. So right now, we don't see any headwinds in that space.
Great, thank you, Hanjum. Now that we don't seem to have any more questions, would you like to move to the closing remarks?
Sure. What I could just say is that we are on the execution of our strategy. The fact that our strategy has always been nimble enough to change for the market, to allow change for the changing market dynamics. And that's the beauty of it, and we have managed to sustain all the pressures in various economic cycles, and whatever, challenges have been thrown our way. And we feel that that strategy is quite resilient, and that has helped us deliver returns for our stakeholders so far. And even going forward, we are rightly positioned, to continue to deliver returns for our stakeholders and provide service, the quality service to our customers, which is expected of us.
Great, thank you so much. Mr. Pervez, sorry, there's one follow-up question on the investment breakdown. If you could give that quickly. Thank you so much.
You mean the percentages or?
The percentage for the fixed and floating PIBs and
So it was 64 and 36.
Great. Thank you so much. And ladies and gentlemen, with this, we would like to conclude today's investor call. Thank you so much for joining us, and I hope you will be here with us next time. Thank you, Ms. Anjum. And
Thank you. Thank you, everyone, for joining us.
Thank you.
Recording stopped.